It's a comprehensive case study in ratio analysis where we are going to make use of various ratio related information and we'll be preparing the profit and loss statement, that is income statement and balance sheet. Okay, let's go ahead. The following accounting information and financial ratio of XYZ Limited relate to year ended 31st December 2013. We have accounting information like gross profit, which is 15% of sales, net profit 8% of sales, then we have raw material consumed 20% of works cost, then direct wages 10% of works cost, stock of raw materials is 3 months usage, stock of finished period is 6% of works cost, debt collection period is 60 days, and we have information that all sales are on credit. Then we have some financial information, financial ratios like fixed asset to sales is 1:3, fixed assets to current asset is 13:11, current ratio is 2:1, then long-term loans to current liabilities is 2:1, capital to reserves and surplus is 1:4. Then we have if value of fixed assets as on 31st December 2012 amounted to 26 lakhs, that is 2,600,000, we have to prepare a summarized profit and loss account, that's income statement of the company for year ended 31st December 2013 and also the balance sheet on 31st December 2013. Okay, so it's a problem where we have a lot of we have a lot of accounting and financial information, so we have to create relationship between many of these items. Only then we'll get enough inputs for preparing the income statement and balance sheet. Now let's try to analyze item by item. First you have a lot of accounting information, then financial information, and if you want to start the basic statement what we are planning is income statement, then balance sheet. So just visualize the structure of income statement. You should have income on one side, then you should have all your expenses, then you will get to know what's your profit. Okay, but how do you start with what's your income, what information you have? Probably for that I think you should go through your financial ratios, and in that the first one is fixed assets to sales. The ratio is 1:3. The ratio says fixed assets to sales, that is fixed assets divided by sales is 1:3. It means for every 3 rupees of sales there is a 1 rupee of fixed asset. Okay, and do we have fixed asset information? If you go through the question in depth, yes you have. If value of fixed assets on 31st December 2012 amounted to 26 lakhs, that is 2,600,000. okay, and they have not given any information what happened to its value in 2013. So assuming it is a non-depreciable asset, we can continue that 2,600,000 for next year also, that is 26 lakhs. So we are basically going to prepare income statement for the period ended 2013. So now we have the major input, that is we know what is fixed assets, and if I apply that fixed assets say in this ratio, I'll get what is my sales. Okay, so that information will help me to get my sales. And similarly fixed assets to current assets is 13:11. So again if I apply my fixed assets, I'll get what is my current assets. Then once I have my current asset, if I can apply that in current ratio, I'll get to know what is my current liability. Then we have long-term loans to current liability. Now through current ratio I can find out what is my current liability. If I can apply that in long-term loan, I get to know what is my long-term loans. Okay, then here we have capital to reserves and surplus is 1:4. So till this stage we would have arrived at what is our long-term liability, what is our current liability, and basically we have to find out what is our equity. Okay, and equity comprises capital and reserves and surplus. Some information is available. Now if we can make use of all this, we'll get some broader picture. Then some accounting information. If you notice, you have gross profit 15%. Now using this ratio you can find out sales, apply 15%, you get to know what's your gross profit. The net profit also apply 8% on sales, you get to know what's your net profit. Then raw material consumed is 20% of works cost. You should know what is your works cost. That is, works cost is nothing but sales minus your prime cost. So what is the prime cost that you have to find out? So raw material consumed is 20% of works cost. Direct wages is 10% of works cost. Then you have stock of raw material 3 months usage, stock of finished period, and things goes. Okay, so now the question is, how do you find out what's your works cost? Okay, works cost, since you know what is your sales, okay, and since you know what is your gross profit, sales minus gross profit will give you what's your works cost. Okay, so on that works cost, if you apply 20%, 10%, 6%, you get to know what's your raw material cost, what's your direct wages, what's your stock of finished period. Okay, so let's get started. So the very foremost assumption in this problem is whatever the fixed asset that is given for the period ended December 2012, which is 2,600,000, okay, that remains in 2013 December also, assuming it is a non-depreciable asset. Okay, so let's have a working note 1 where we'll find out the sales and current assets, and for that we'll make use of those two ratios. Let me reproduce them. Yeah. So the first one, the first financial ratio, what you have in the question is fixed assets to sale is 1:3. So it can be written as fixed asset by sales is 1 divided by 3. We know fixed assets is 2,600,000. So it is 26 lakhs divided by sales is equal to 1 divided by 3. So if I transfer this 26 lakhs, or what I can do is I can transfer this 3 in the denominator to the left hand side. So 26 lakhs into 3 is equal to sales. Sales can be taken to the right hand side. So we can say sales is 78 lakhs, that is 7,800,000. Okay, so here we have the details of sales. We have the details of sales, and this will help us to find out many other information, which of course we'll be using gradually. But now let us also find out the current assets, because in question we have fixed assets to current asset, the ratio as 13:11. So how we are going to write it? As fixed assets divided by current asset is equal to 13/11. We know fixed asset is 26 lakhs divided by current asset is equal to 13 divided by 11, and I can transfer this 11 to the left hand side to the numerator and 13 to the denominator, and I can transfer this current asset to the right hand side. So that calculation will give me what is the value of current asset, and it is 22 lakhs. It is 2,200,000. Okay, so in this way we get to know what is our current assets. Let's move on to the next working note. Let us find out what is the raw material and direct wages. Of course, we have discussed the raw material and direct wages are dependent on works cost, right? It is certain percentage of works cost. If I go back to the question says raw material is 20% of works cost, direct wages is 10% of works cost, and first of all you have to find out what is works cost. Works cost is nothing but sales minus gross profit. So you know what is sales from your working note 1. Gross profit, I think the percentage is available in the question. So if you can subtract these two, you get to know what is your works cost. Let's see. I'm sorry. Yeah. So I'm just repeating works cost, because your raw material cost and direct wages are dependent on works cost. Raw material is 20% of works cost, direct wages are 10% of works cost. So first of all you have to find out what is works cost. Works cost is nothing but sales minus gross profit. Sales we have derived in our earlier working note, which is 78 lakhs, minus gross profit. Gross profit, for this you have to go back to the question. Your question says gross profit is 15% of sales. So here on this 78 lakhs, if I apply 15%, it is 11 lakh 70,000. That is 1,170,000. That is 11 lakh 70,000. If I am subtracting this from 78 lakhs, what I get is 66 lakh 30,000. This 66 lakh 30,000 is nothing but the cost of goods sold, or otherwise we call it as works cost. So once we have this information, then it would become simple. We can find out what is the raw material cost and direct wages cost, and that's what we have it here. Raw material consumption cost is nothing but 20% of works cost. So it is 66 lakh 30,000 multiplied by 20%. What we have is 13 lakh 26,000. Then the second one is direct wages. Question says it is 10% of works cost. So 10% of works cost works out to 66,30,000 multiplied by 10%. We have 6,63,000. So we got two critical information, right? This will help us to prepare the income statement, that is profit and loss statement. Moving on, working note 3, where we'll find out the stock of raw material and finished goods. In earlier working note, our focus was finding those operational expenses. Now we are trying to find out those related inventories. Now, how do we find out the stock of raw material? If I go back to the question says stock of raw materials is equivalent to 3 months usage. So we should know what is the annual usage of raw material, which is basically for 12 months. If you can find out what is for 3 months, you get to know what is the stock of raw material. And what about the finished goods? Question says stock of finished goods is 6% of works cost. In our earlier working note, we have already derived what is works cost. Simply apply 6% on it, you get to know what is your finished goods. Let's see. Let me run them. Yeah. So coming back, stock of raw material, question says 3 months usage. We know what is 1 full year usage. In our earlier working note, we have derived 1 full year usage of raw material is 13,26,000. It was 13,26,000. Now this 13,26,000 is basically for 12 months. This is basically for 12 months. So what we should do? We have to find out the stock of raw material for 3 months usage. We know this 13,26,000 is for 12 months. So I am dividing it by 12 and multiplying it with 3 because 3 months is the stock usage or stocking period. Okay. So 13,26,000 divided by 12 multiplied by 3, I get the value as 3,31,500. So this is the stock of raw material that has been maintained. Then calculation of stock of finished goods, it's not a big deal because the question says it is simply 6% of works cost. What about the works cost? We know works cost we have calculated in our earlier working note, which is 66,30,000. Simply multiplied by 6 by 100, we get to know what is the stock of finished goods, which is 3,97,800. So in this way, we have derived what is the stock of raw material, what is the stock of finished goods. Let's go ahead. Working note 4, let us find out the current liabilities and debtors. Let me explain. Yeah. Now, how we can find out the current liabilities? For that, the linkage is with current ratio, okay, and current assets. Now, if you recollect, we have derived the current assets, right? Because the information which you had in the question, fixed assets to current assets, the ratio 13:11, where we were able to derive what is our current asset. Our current asset was 2,200,000 or 22 lakhs. Now, if this amount is applied in current ratio of 2:1, we can find out the current liability, and that's what I'm going to do here. That is calculation of current liability. We know current ratio is 2:1, that is current asset by current liability is equal to 2:1, which can be simply written as 2. Okay, so we know current asset is 22 lakhs, current liability we don't know, we are trying to find, is equal to 2. So I can say this 22 lakhs, if I bring this 2 to the left hand side, it comes to the denominator. 22 lakhs divided by 2 is equal to current liability. So I can say current liability is equal to 11 lakhs, or it is 1,100,000, right? So I have current liabilities with me. So that's one of my objective, current liabilities, that is done with. Then I can also find out the debtors. How I'm going to find out the debtors? If I go back to the question says debt collection period is 60 days. Question says debt collection period is 60 days. Now this information will help me to find out the debtor, but again for finding debtors, I need information on credit sales. And again the question gives me a hint that all sales are on credit. So whatever the sales which we have derived in our working note, we can very freely assume that it's a credit sale. And if that's for 365 days or 360 days, what is for 30 days? That will give out what is debtors. And I think, yeah, that is reproduced here. See, debtors collection period is 60 days. Question says all sales are on credit. So with this information, we can find out what is the value of debtors. So what I'm going to do, I'm going to apply the formula of debtors collection period. The formula for debtors collection period is nothing but debtors divided by credit sales multiplied by 365. That's it. You know what is the average collection period, which is 60 days. So I say average collection period is 60. Debtors we don't know, that's what we are trying to find. But credit sales is nothing but the sales which we have derived. And if you can multiply this number, so if I'm going to take all those, that is debtors divided by sales of 78 lakh multiplied by 365 is equal to 60, then this calculation will help us to find out debtors, and it works out to 12,82,192. So in this way we have derived what is debtors. Let's move on to next working note, that is working note 5, where we are going to derive long-term loan. But how do we find out long-term loan? For that you have to go back to question. In question you have information that long-term loans to current liabilities are 2:1. Already we have derived what is current liability by applying the current ratio. So now we'll bring back that. Let me capture them here. So yeah, question says long-term loans to current liabilities are 2:1. It means when you make it as a formula, you will write long-term loan in the numerator and current liabilities in the denominator, and this is equal to 2:1. So you can say it is 2. Okay. So we'll write that long-term loan divided by current liability, that is 11 lakhs, is equal to 2:1. So simply do the cross multiplication and you get long-term loan is 22 lakhs. Okay. So that's how we find the long-term loans. Next working note, we'll try to find out the cash balance, because we know current assets. Okay. From current assets, if we can subtract the known current asset items, then we'll be able to find out what is the other current asset, and I'm going to call it as cash balances. Okay. So I think already we have derived what is the stock of raw material, we have derived what is the stock of finished goods, we have derived what is the debtors, and we know what is the total current assets. So let's subtract all the three items from the total current assets, and that should give us what is the cash balance. Let's see. We know what is total current assets, which is 22 lakhs. From that, let's subtract debtors, which is 12,82,192. Let's subtract raw material stock, which is 3,31,500. Let's subtract finished goods stock, which is 3,97,800. So all put together it is 20,11,492, and the difference is the cash balance, which is 1,88,508. So this is how we derive the other current assets, or say cash balances. Okay. The next item is calculation of net worth. Now this becomes more important, because if you go back to the question where the financial ratios are discussed, we had items like fixed assets to sales, which we have covered. Then fixed assets to current assets, yes, we have made use of. Current ratio we have applied. Long-term loans to current liabilities we have applied. What is still pending is capital to reserves, and the ratio is 1:4. But how do we make use of it? Because the ratio is capital to reserves. So you should either know capital or reserves. Okay. But unfortunately we don't know either. We don't know what is capital amount or reserve amount. It means we can't make use of it. So the only option in front of us is find out the sum of both, that is capital and reserves. And is it possible? Yes, it is possible, because the aggregation of capital and reserves is nothing but net worth. And you can find out the net worth easily. How? By taking the total assets. From total assets, subtract all the known liabilities, then the difference is going to be the net worth. And net worth is nothing but the composition of capital and reserves. And for that, the first question, do we know the total assets? Yes, because we have derived what is current asset and we know what is fixed asset. Both put together forms total asset. From the total asset, if we can subtract the long-term debt and current liability, we'll get what is net worth. Let's see. We have to find net worth. We know fixed asset and current asset. Fixed asset is available in the question, 26 lakh. Current asset is 22 lakhs, which we have derived. So the total assets are 48 lakhs. So automatic conclusion is total assets are nothing but the total liabilities. So from this, if I subtract the known liabilities like long-term loans, which we have derived 22 lakhs, and current liabilities 11 lakhs, that is total put together 33 lakhs, what we get is net worth. Now this is very critical, and this net worth amount is 15 lakhs, that is 1,500,000. Now this is a composition of two elements, that is capital and reserves. Now it's time to go back to the question. If you go back to the question says capital to reserves and surplus are in the ratio of 1:4. It means both are put together is 1 plus 4, that's 5, and capital is 1/5 and reserves are 4/5. So that should be the understanding, and for that let's have this working note number 8, where we'll find out share capital and reserves and surplus. Let me just run them. I'm running them. Let's see. Yeah. So here, have a look at this. Capital and reserve and surplus, the information you have in the question is 1:4. It means capital is 1/5. Reserves are 4/5. Okay, so both put together it means it's 5. Capital is 1/4 or capital is 1/5, to put it rightly. Reserves are 4/5. It means when both are put together they are 5, and we know net worth is sum of capital and reserves, and it's 15 lakhs. It means that 15 lakhs can be equated with 5. If 15 lakhs is equivalent to 5, what is 1, what is 4? If that can be done, then we are finished. Okay, so if you look at it, net worth is nothing but share capital plus reserves, and put together it is 15 lakhs. So the information what we have is capital to reserves and surplus. Capital to reserves and surplus is 1:4, that is 1/4. So here the point which you have to notice, if both can be put together, it can be called as 5. So what I'm going to say is this share capital is 1/5. That's what we have derived here. This share capital is 1/5 of what? It is 1/5 of net worth. Okay, what about this reserves? This is 4/5 of net worth. So if you want to find out the share capital exactly, what you have to do, you have to take the share capital, that is 1/5, apply it on net worth. You know net worth is 15 lakhs. Apply it on net worth 1/5, you get to know what is share capital, and that's what we have done here. We have taken the net worth 15 lakhs, apply 1/5 on it. 1/5 representing share capital. 15 lakhs into 1/5, you get 300,000, 3 lakhs. So that's your share capital. What about the reserves and surplus? Take 15 lakh, apply 4/5. 4/5, what you get is 12 lakhs. So in this way only we can derive what is the share capital amount and what is the reserves and surplus amount. They are 3 lakhs, 300,000 and 12 lakhs, say 1200,000, right? So now I think we have most of the information. Now it's time for us to prepare the profit and loss statement and balance sheet. Let's go to that, but let's also make it little detailed. That is, we'll have trading account, we'll have profit and loss account, and then balance sheet. Okay, let's go ahead. So here is the structure. The heading is profit and loss account of XYZ Limited for the year ended 31st December 2013. But how I'm going to carry is, the first part will be for trading elements, the second part will be for profit and loss elements. Okay, so what are the information we have? Buy sales, which we have calculated, which is 78 lakhs. Okay, then closing stock of finished goods, which is nothing but the 6% of works cost, and it is 3,97,800. Then on the debit side, direct material consumed 13,26,000. Then direct wages 6,63,000. Okay, then one critical item, this I am applying directly. What is this? This is nothing but the gross profit, and this information you have in the question, that is gross profit is 15% of sales. So I know what is my sales, 78 lakhs. I'm directly applying this 15%, 11,70,000, without even waiting for further calculation. It means there is going to be some balancing figure somewhere. Now on the credit, I have two items. On the debit, I have shown the known two items, and this is something which is derived. Okay, and now you might be wondering what happened to the finished goods of raw material, or I'm sorry, what happened to the closing stock of raw material. See, understand, this is basically the raw material consumed. Okay, if you want, you can add a word here. to direct material consumed. What is the formula for consumption? It is opening plus purchases minus closing stock. Okay, it means the closing stock of raw material is taken care. So don't repeat raw material stock. If you want to repeat raw material stock, then you have to add the closing stock here. Okay, so I'm not doing that because this 13,26,000 assumption is it is raw material consumed. It means it is after subtracting the closing stock of raw material. Okay, so now what we'll do, let's total the higher side. Look at both debit and credit. On the debit side you have 3 items, but they are hardly close to 30 lakhs. On the credit side, if you look at it, it's a bigger number. So let's take the total on the credit side. The total works out to 81,97,800. Let me carry the total to the debit side also. 81,97,800. So from this 81,97,800, if I subtract these 3 items, I should get a balancing figure. And that balancing figure is called as works overhead, and this is basically a balancing figure. We call it as works overhead, and the amount involved is 50,38,800. Okay, so in this way the balancing figures were given a name, that is works overhead. And now we'll transfer this gross profit to profit and loss account, because so far we were in trading account. We'll transfer to profit and loss account. So we'll say by gross profit brought down, and the amount involved is 11,70,000. It is simple transfer. Then we know what is net profit. Question gives you the information about net profit as a percentage of sales. It is 8% of sales. So 78 lakhs multiplied by 8% gives us the value as 6,24,000. Okay, so now we'll take the total on the higher side. On the credit side we have 11,70,000. On debit it is only 6,24,000. So we'll take this total 11,70,000 on both sides. It means on the debit side there is going to be some balancing figure, that is 11,70,000 minus 6,24,000. There is a balancing figure of how much? 5,46,000, and I'm going to call it as selling and distribution expenses. This is basically a balancing figure. So this 5,46,000 is the balancing figure, and I have given the name as selling and distribution expenses. You can call it as selling general admin expenses also. So we have prepared the trading account and profit and loss account. Now we'll move on to balance sheet. We'll move on to the balance sheet of XYZ Limited as on 31st December 2013. We have various information with us. We have calculated equity, we have calculated reserves and surplus, we know what are their long-term liabilities, current liabilities. Okay, let's capture one by one. Liabilities and assets. Item number 1, share capital from our working note 8, it is 300,000. Then we have determined or derived what is reserves and surplus, which is 1,200,000. Then long-term loans from our working note 5, which is 2,200,000. Then current liabilities is 1,100,000, and the total is 4,800,000, that is 48 lakhs. Then moving on to the asset side, fixed assets, assuming it's a non-depreciable asset, say something like land. Okay, we are maintaining that 26 lakh or whatever is given in the question, that is 2,600. We are maintaining it. 2,600,000 we are maintaining it. Then we have current assets, in that the breakup is when you think of current asset, don't just consider only the closing stock of finished goods. You also have closing stock of raw material. So stock of raw material should come first, 3,31,500. There is a possibility that you will exclude that item because it was excluded in trading account. Actually, it was not excluded in trading account, it was adjusted in raw material consumption. That you have to keep in mind. Then comes stock of finished goods, which is 6% of works cost, 3,97,800. Then we had debtors, 12,82,192, and finally the cash balance 1,88,508, and the total is 48 lakhs.